Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Christina Aquino is here with our stocks on the move today. Christine, you know about Pokemon.
I know about Pokemon. I used to go Pokemon hunting with the Pokemon Go app. It was a great way to get a walk.
All right. Let's talk about the stocks on the move. We're going to start with Oracle, which was a big mover yesterday.
Absolutely, Scarlett. So it's taking a bit of a breather today. Oracle, ORCL shares are down more than 3%. But let's put that into context, right? We did get that record surge yesterday, up nearly 36%. It added $89 billion to Larry Ellison's coffers in one day, put him right above Elon Musk to be the world's richest person. So not too shabby. Now, the thing to really focus on, according to Bloomberg Intelligence, now that the dust is settling a little bit, is really that backlog order size, 455 billion. That exceeds the orders for Microsoft, AWS, Google Cloud. And it really highlights that Oracle has positioned itself uniquely by focusing on training, AI training workloads, rather than some of its rivals who are focusing on provisioning clouds. And so basically, it's focused on fine-tuning LLMs with enterprise data. That's what gives it the edge in capturing those training workloads, according to Bloomberg Intelligence, and potentially some longevity in the market.
You're also looking at Centene. What's going on there?
Absolutely. Top performer today. So ticker CNC shares are currently up more than 12%. And so the health insurer getting some good news because it gave positive views of its Medicare Star ratings. And it said that it expects costs to improve in its Medicaid business. So remember, right, the Medicare system, it has a star rating system. The higher stars you have for the plans that you provide, the more incentives that you get from the government. That's basically how it works. And so a lot of health insurers want to have customers up in those higher rated plans so that they can get more incentives. And Centene also reaffirming its adjusted EPS forecast for the full year, $1.75 per share versus an estimate of $1.64. So also some good news there.
I've been caught in many conversations with elderly people about how many stars the program has. They're very, very concerned about it. All right, let's talk about UPS.
UPS not doing too shabby today. Shares are up 0.4%, but earlier it was down more than 2%. And that is because it was cut to underperform at Bank of America. And the analysts there are citing the end to the de minimis exemption. So for those who don't know, de minimis, that was an exemption that applied to small packages shipped directly to U.S. consumers from retailers abroad. If they were under a certain size, under a certain value, they didn't need a customs declaration and duties. That exemption ended at the end of August. And so now a lot of analysts are thinking these will be, shares like UPS, Fedex also suffering, will be the ones that really suffer. Interestingly, it's not a widespread view yet that UPS is, an automatic sell because of this news. It's actually just, the bulk of analysts still divided whether the stock is a buy or hold, but not certainly not good news, the end of that exemption for this company.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.